Where to place your stop loss is one of the most vital, important things when it comes to day trading. And I want to show you where exactly you should always place that because technically, sure, you having a great entry, you having a great strategy, you knowing where to enter, you know where to exit, that's great. But if you don't know where to exit for a loss, then you're just going to blow up your account, which is other words saying you're going to lose all of your money, right? And that's what we want to avoid. So with my strategy, very briefly, when things come up to hit these areas, being supply zones at the top or a demand zone down here, that's basically we basically take a trade. So ideally, on the left side of the blue line, we basically draw the high of the day where two candles agree. So it's a green candle and a red candle. We draw that major supply zone. We draw a low of the day at that point in time where two candles agree. So there's a green candle and a red candle next to each other, and we draw it over, right? So technically, once things get past this blue line here, past 9:30 a.m. CST, you want things to technically come down, tap the area, and then bounce up, and that would be an option call for you to take a play and then that's basically you make money when things go to the upside. And you can also make money when things go to the downside, which is where I'm going to show you on this trade here where to exit for a stop loss, basically, to be as safe as possible. So technically with an option put, it goes up, it hits the area, and it can come down, and you can make money with it going downward, being correct about that direction. So if we go to the 1 minute chart, I want to walk through where to exactly place a stop loss like that, and I'll show you the other trades for this day and kind of talk about the day as a whole. So for this day, let me zoom in a little more and pull this outward. So we have this. We had it going up essentially to kind of hit the area as I talked about, and it started to reverse back down, and then you can see it clearly failed basically. So as far as the entry piece here, you want to actually wait for the zone candle, reversal candle, confirmation candle, and the entry candle. So a zone candle is the first candle to basically touch the zone, which in this scenario, check out how messy this is as well, right? This is the first one to basically really touch the zone. And then after that, you need three red candles going downward to prove the direction is going correct, right? You would want, hypothetically, if this is the first zone candle, then you want candles going afterwards downward, and that would be your reversal candle, confirmation candle that the reversal is right, and then the entry candle to show that that's right, right? So that didn't happen. It just continued to go up, which would be fine, right? So maybe this is the zone candle, and then this guy starts forming red, and that's a reversal because it's the opposite color of this one, so it's showing, hey, it's giving a downward trend, right? But then look what happened. Nothing literally fell down after that. If I can grab this and pull this over, nothing fell down after that. So in my mind, one way to not get in trades like this is that unless it went up perfectly and came back down perfectly, I don't want to enter the trade. So that's the first flag on how to save money and not enter a trade. FYI, I'll show you the other flags as well. But then finally it did fall down, right? It gave you a red candle here, which would be the reversal candle. And then next one, not a confirmation candle. Kind of ugly, kind of annoying. And the next one, okay, hey, this one's finally lower over here. But the catch again with this one is why my strategy has very specific, strict rules. The full body of the candle needs to be outside of the zone, right? So this one doesn't count as a confirmation candle. This actually is the confirmation candle. So you see how it has multiple, just the strategy itself has built-in risk management, essentially, for you to make sure you don't lose as much as possible, right? So we have our this doesn't count over here. So we have our confirmation candle here, right? So make sure we go back. We had our first zone candle over here. Then we had the reversal candle over here. Then we finally have this confirmation candle in this specific spot right here. And then finally, let's move this over actually. The potential entry is where this kind of yellow circle is right here where my mouse is hovering. Now, again, the catch with this one again is that we finally did get it to go down, but A, it was a little messy to get to it. B, once one thing that I didn't like about this candle here is the confirmation candle, right? Sure, it's lower than the candle before. That's perfect. But look at what it did. The candle formed going down right here, right? It went up to be drastically green, basically about 50%, if not a little bit more green. And then it finally went down to red. And it's like, okay, that's great. And then it moved back up to this spot for a very small red amount here. It's not a doji, but it's very close, right? So sure, it's a downward direction, but the candle doesn't show any strength as far as the body of it, right? Look how small this is versus this body of the candle, right? I'd rather it be a little bit bigger, not these wicks at all, if anything, and then I'd feel more comfortable. But so I don't like that it went up, tapped the zone, and then kept tapping it, tapping it, tapping it, tapping it, and then finally fell. That's flag one. Flag two, the confirmation candle was a little too dang small because the wicks were so kind of wide on each side of it. That's flag number 2. Flag 3, let's just say you entered the trade, right? You're going to enter here, and then it immediately went against you, right? As you can see, it went up over here, it kind of went down, it went low in profit, but you entered in this specific spot. So for me, my first ideal piece of evidence to say I need to get out is A, they had those pieces against me. B, it essentially not really going anywhere, right? It's almost like it's kind of going sideways. So if a trade's going sideways and not being directionally going down, right? Because again, you make money when the market goes down, being correct about the direction here. Pull this out over here, right? Then, and I mean, not aggressively, but you want sizable candles after you enter the trade. If it's going sideways, that means something is wrong. You need to get out ASAP. So the nice thing about this is that if you entered in this specific spot, exactly where this line is at 553.23, then you have the opportunity to exit here. And you also have the opportunity to exit here for break even. And you have the opportunity to exit here for also a break even. And if you still didn't, exit on those pieces, your stop loss is actually right here, right? So, A, I think you should listen to the signs before you enter trades and be as very picky as possible. B, let's just say anyway, still, you entered the trade, you wanted it to work, you just wanted to force it basically. You thought it was coming down anyway based off your analysis. Then you may be looking at this like, oh my God, is this a huge loss or not? Thankfully, it's not because, again, since this candle was relatively small in the first place, we can actually look at this. We can go to this area here, switch this to default. This is where the option was basically. You bought in this little area. This is the option chart. I'm not going to go through this at the moment, but this is the option chart. If you bought one option contract, same day expiration contract, one contract is only $82. If you bought 100 of them, ignore the dollar sign, 100 of them, that's $8,200. That's what I buy, if not more nowadays. If you sell that, you're going to sell it at a loss. It's going to be at 78 cents. One contract, you'd sell it for $78. You bought it at 82, you sell it at 78. So the loss of that, if you're only trading one contract, is $4. It's really not a bad deal from a trading perspective. And then 100 contracts, you only lost $400, right? Still not that bad. I mean, think about it. You put in $8,000 and you only lost 400, or you put in $82 and you only lost $4. That's still fine from that perspective. And you had and for me, like, let's just say you did enter the trade, you could still, if we go back to it, go back over here, 1 minute, yep. Like I mentioned, you still had the chance you entered on this little blue line where I drew here. You could still exit for break even, if not a slight win here. Break even, if not a slight win here. Break even, if not a slight win here. You still could actually get some meat on the bone anyway, if not just get out safely. There's nothing wrong with that in the first place. This could be a quote unquote scalp if you want to call it that, basically. But this is the way and how you specifically should A, place a stop loss, and B, actually identify that, with certain flags in your mind that this probably is not a good trade. I shouldn't enter it. And if you do enter it, you have the flags in mind so you can get out early or get out safely, more importantly, right? Even if you do an option put, same day expiration with the strike price of 533. And by the way, the strike price, as far as how I picked it, it's literally just at the price point of where things are right here. It's at 533, so I just picked 533. Not complicated. Same day expiration at the money contract. Don't want to do anything crazy. Just want to be able to get in, be right about the direction, get out. I don't want to think more about it. But to go wider here, I want to let's go to the 5-minute chart here. Talk about this trade down here because there's not a trade, right? We had the low of the day over here, drew the zone over, and ideally, again, we want it to come down, tap it, and then do a perfect, nice, beautiful bounce upward. If we zoom in on that specific area,
if you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z, from the ground up, so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
Check this out. I'll zoom in like there. All right. So you see it came down, got close to it, rejected, kind of a good sign, came down, tapped it, rejected, but the candles were way too big, right? We have zone candle, reversal candle, confirmation candle, nothing. Then maybe an entry at that specific spot, maybe. But it's too dang far from the stop loss, right? If you're entering here and trying to exit for a loss here, then what's your take profit all the way up here? I mean, it doesn't make any sense. You want this to be as close as possible down here with at least a little sizable candles without these crazy wicks like the other one, etc. And then again, with the rules having risk management built in, you saved yourself from getting in this giant loss. Because if you tried to sell here, look how big the candle is. You'd more than likely accidentally sell here, if not worse, because it's going so fast from a volatility perspective. And then again, same thing, right? It came up, tapped this area, or not tapped this area, broke above, tried to kind of bounce above, bounce above, bounce above. You can kind of quote unquote BS a trade and say zone reversal confirmation entry and do like a small scalp. But again, I don't like that stuff. I would imagine you don't either. Because if your only way to get this trade here at 10:08 a.m. is to stare at the chart since 9:40, is it 9:40? 9:41 a.m. That's 20 plus minutes of watching the chart. The longer you watch a chart, the more probability from a day trading perspective, you're going to lose a trade. You have too much thoughts in it because at any point in time, once, as an example, I'll give you an example. Once you see it bounced up here, this is literally what happens. You see it bounced at a big candle here, and then it goes over here, bounces, goes a big candle over here, and you're thinking, okay, well, it is bouncing off of it. Maybe I can make a trade. I'll just, you know what? I'll just jump in right here. It seems like it'll work at some point, and then it fails because you force a trade because you're essentially watching the dang charts for too long because you feel like you're missing out, and you're not. You're just watching it too long. There's no fear of missing out. Fear of missing out does not exist. It's you're not busy enough in your own regular life. Like realistically, you're staring at the chart too long. FOMO does not exist. It's you're watching the chart for too long and you're making up trades that don't exist for A, and part B, you're not following a specific strategy with risk management built in, specific criteria that says when to enter, when to exit for a win, and when to exit for a loss, and so on. FOMO doesn't exist. You're creating false trades that you think you believe or would work because you're watching things, right? And so here's the nice thing about this day. Based off of how my strategy is, right? You would think, okay, well, Maurice, where's the trade at then? So we have the 5 minute chart here. We have the stuff up here. Maybe there's, okay, hey, let's go. There's a high of the day up here, goes down, taps it, falls, taps it, falls. Oh, there's some more option puts. Is that what you're saying, Maurice? Is that what you're saying to wait on? Nope. Check this out. It goes up, hits it, well, doji, which is interesting. Falls down, two candles too big, candles way too far entry wise, no trade. Comes up, hits it, falls down, as mentioned, messy. Comes up, zone candle, I'll zoom in for you. Zone candle, reversal, no confirmation because it's not fully outside of it. Confirmation, no entry, and also too far away. Boom, nothing for you to do. You go over here, I'm going fast on purpose, by the way, because there's nothing here, right? Oops, pull this over. It comes up here, doesn't fully tap it. I mean, you can kind of BS and say it's a zone candle, but it's not a zone candle because it's too far away. And even if it was, what is this? The reversal, and then this is the confirmation. That doesn't make any sense. You're pulling hairs because this is not pulling teeth because this is not a true zone candle. You need the body up there, not just the wick. Wicks can do anything. They're false beliefs. So the question here is that okay, there's the stop loss. Understand how to do the stop loss. Where's the trade for the day, Maurice? There's no trade at all. You'd have alarms going off. You'd have potential quote unquote almost optional trades that you can basically take if you stared at the chart and force something. Like you could really, some people do force, if I go back, some people do force these trades and they do work, right? But for me, I want the highest quality trade possible with the least amount of effort. I want low risk, high reward. This over here is high reward and high risk. I don't want it. Maybe you do, but I want to have the least amount of effort to make the most amount of money. So here's the last thing I'll leave you with, especially when it comes to stop loss. I want to give you a last tip here. The goal when it comes to trading and being profitable long term is to take as few trades as possible. It's your first goal is this: be able to potentially see and identify one trade a day, right? That's the first goal. After that, it's being able to take one trade every other day, right? Because within a 2 day time frame, there's typically at least one trade, typically. And then after that, long term, your goal is to be able to take one trade within a 3 day period, and then one trade after that within a 4 day period, and then one trade after that within a 5 day period, which is 1 week, one trade a week, and then it continues on basically. I'm personally, if you want to know from my POV, I'm at the one trade per week, and the reason why, I think I still have this open, is my one trade for the last week, because today is what, the 18th? When it comes to the 14th, I basically took a trade and made $12,000. $12,266.82. So when you think about it, if you could make 12K, 13K if we round it, I guess, 13,000 in a day, do you really care if you take another trade for the week? Think about it. The point of trading is not for you to take everything there just because it's there. You don't care about these stupid charts as much as you think you do. You care about the money. So if you care about the money, put in the least amount of effort then. And be so selective that you say no. Think about how hard it is where I am right now. If I'm taking one trade a day, that means I'm saying no to 4 full days where there was potentially one, two, three, four zone taps essentially. So if there's 4 zone taps, let's say on a daily basis, 4 times 5, because it's 5 days, that's 20, right? So I'm technically saying no to 19 trades and yes to one. You know how difficult that potentially is? But that's the goal long term. But for now, if you're new to the strategy, you're new to trading, you're new to all this, your first goal is to be able to A, have a strategy that actually works, B, pull this over, A, have a strategy that actually works, B, have a strategy that identifies pre-planned entries, pre-planned exits for a win, pre-planned exits for a loss, hence your stop loss here, and last but not least, C, take as few trades as possible so you can maximize your gains.